Hello, Hanson.
Hello, sir.
Okay. All right. Sorry about that.
Okay, sir.
Our power is not stable like your power.
I understand. Sorry.
Okay. So, as I was explaining, so if you look at this very well, you can see that this movement, just like we said the Fibonacci will do, you can see is so accurate. Because
Mm,
usually when the market hits the D, when the market hits the D, because the D must always be a Fibonacci level, you will naturally see that the market will create either a resistance or a support at the D. As soon as the market hit that D. Okay, so let me take you back to what we discussed on gold, during our last class. I told you I was on gold and I
yeah.
was I was actually I was buying, right? And I said I'm
Mm-hmm.
going to close that buy, then I will
Yeah.
switch to sell, right?
Yeah, that trade, how did it go?
So it went very well. Okay. So after that class, I closed the buy and then I waited uh to take a sell. Okay, so let's see. Go. So I want to show you how effective the Fibonacci worked on that gold. Okay, so this is gold. This is gold 1 hour. Okay. We
Mm-hmm.
did the analysis. We're trying to do the analysis here. Okay, that day.
Mm,
We're trying to do the analysis here. But let's see. So this is the top. This is the highest point the market got to. Okay. And now
mm-hmm.
if you look at this now, you will agree with me that this place is a resistance.
Yeah.
This place is a support. This place, this place, not a perfect resistance. Okay. So we say this support is
Mm,
not a very good one. Okay, so let's come down. So this place is a support. This place is a resistance. This is a support. This is a resistance. This is a support. This is a resistance, right? Now, all this support, resistance, you can see that because this is 1 hour. If I switch this chart to daily, right? You look at daily,
mm-hmm.
all those resistance that you are seeing, you can see that here it's just one resistance and then one support. Okay. So now we did the analysis
Mm,
that we said we draw we draw our Fibonacci from here. So let's put here. Okay, we draw our Fibonacci from here to here. Okay. And we said that this market pulled back to 78.6. And I said because the market pulled back to 78.6, it will go to 127.2. Look at it. When we are doing this discussion, this market has not gotten here. Watch this. Look at it. When we did the discussion that day, this market has not gotten to this point. This market was
is
somewhere
it
far.
gold? Gold
Yeah,
USD.
this is good USD.
Mm,
Okay. Now, after
mm,
that class, I enter sell and the market came down, made some very good profit out of that sell. And as soon as he hits this level, as soon as he hits this uh, uh, 127.2, I know
mm.
the market is going to make a pullback. Now, come to think of it, this level that the market has hit,
Mm.
Watch this place. See this place. We say gold is buying, right?
Yeah.
Gold is in an uptrend, is buying. And now, this was the last high the market created before it went up. Now, the market has come and created a low and has breakthrough. So if we go by our analysis and say, because the market has broken through this high, it has created a higher high, right? So if we put
Yeah.
our Fibonacci here, say this is A, this is B, okay? So say this is A, this is B. Now the market is coming to C. So you can agree with me that this point, at this 50 level, the market already formed a C, right? The market already formed a C here. We say this is C. The market goes up from there, but the market could not go and break through the higher high and create another high. Okay. And then the market decided to come back to create a deeper C. Okay. Now, this your deeper C is just like this one that I was trying to explain to you. Where is it? Uh, yeah, this one. This deep. I said when the market creates A, B, instead of the market to create C and go to D, the market creates sub A, sub B, sub C, sub D. That's exactly what the market has done here on this chart. This is A, this is B. This is sub A, sub B, sub C, and then sub D. Now, from this now, the market can now probably do a long buy, to the D of this extension. What is this D? If you look at it, this is what 61.8, right? It pulls back. Look at it. It pulls back. This is 61.8 level. So we are probably going to see gold rally from where it is now to 161.8. Yeah. Somewhere here. So if gold is going to buy from year to year, how many pip is that? Okay, so from here to here, that is 6,000 pips. I mean 600 pips. Okay, no, 6,000 pips. Okay.
But it might take a week or 2 or 1 month.
It will take a long time. Each of this candle is 1 day. So it might take another maybe 20 days, 30 days before it gets there. But you that did the analysis now, you have taken the trade. So you buy, you put your stop loss here, and then you allow the market to run. So in trading, we try to take the trade and exercise patience for the trade to run.
Yeah.
Except you want to do intraday trading, you want to scalp. If you want to scalp, fine, no problem. But then with this, you have to ensure that you are patient enough to stay on the trade. Okay. So just to confirm to you that this Fibonacci of a true works. That's the whole essence of this explanation. So these are so don't just think that because you identify A, you identify B, market come to C, you just run to D and just make money. No. All these plays in the market. So the market does not just come to say A, B, C, D, and everything is a straight line. You just go pam, pam, pam. No. It does all this movement. And that movement, so this movement that you saw here can also be likened to a pattern. So I can easily say this is A, B, C, D. So I can come here and pick triangle and say this is the bottom of the pattern, this, and then we'll complete this. Okay. Then you pick the other half of the pattern, pick this, and then this. Can you see that? So this is how patterns are formed. So I don't need any special head. I can look at the market and see all the patterns in the market. I don't need any special head to know, to look at them. Okay. You know, this is another part of the forex trading that so many people don't know.
This is
Okay,
my first
because
opinion.
it's very complicated to understand it. Okay, these are called harmonic pattern. Okay, so it's somehow complicated. So you don't see too many people talking about it or teaching it. But you know
Mm,
one thing, they are very, very effective because
mm,
there are ratios. Like in this case, now this pattern is simple. This retracement is coming from 61 161 point 61.8. So you can say you can actually measure your pattern here and say your retracement came to 61.8 Raju. So you can see that the candle body did not break below the 61.8.
mm,
You see, the candle body did not break below the 61.8. So you expect the market to buy to 161.8. So your first take profit in this instance will be here. I say here first, and this will be second, before you can now talk of subsequent take profits. So the next one will be this, next one will be this, next one will be this. So any of this level where the market gets to, and then it gives you two candles to the left, two candles to the right, is a take profit. Okay.
mm.
All right. So if that is clear enough, we can now look at the chart. Okay, for each of this pattern, for each of this style or whatever, you have an example. Okay, this is a case where the market moved from point A to point B, and then with a very shallow retracement, it goes to D. This is your A, this is your B. You see the market, not too much of pullback, and then the next thing is boom, 161.8. You see that? This is real life market.
Mm,
Okay. Look at this one. The market comes A and gives you B. Then the market attempts as if it's going to D, but came back into the AB boundary. Look at it. It's your A, it's your B. The market moves, and then boom, it came back into the AB boundary. You locate a new C. And from that new C, the market run to D. Okay.
mm,
This one, this is a case of where the market comes back to a retracement level and aggressively move to the D. Okay. The market
mm,
just pulls back and the next thing, boom, it goes to D. So you look at this Fibonacci here. Okay. The market pulls back. See, are you seeing the way it just went pam, 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 straight to D, 161.8. It gets here, it pulls back again. Immediately, pam, 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 it goes to D, 161.8. And yeah, it got here, it pulls back again. And
mm,
then, bam, it go again, all the way to D. Look at this one. I want you to watch this. In this first one, it pulls back to this red level, this first red level, and the
mm,
market moves to this red level. Can you see that?
mm,
Then this second one, it pulls back to this red level, and the market move what to this red level. You see that? In this
mm.
case, it pulled back to this blue level. Look at it, this blue level here, and the market moves to the blue level. You see that? So
Yeah.
if you know this Fibonacci very well, it will look like as if you are playing a game in your trading. Okay. Then
Mm,
this one is that one I told you that just like what I described for you now, the market creates A to B and then do like A, B, C, D to the downside, which is this case. It does A, B, and then it does A, B, C, D before trying to go to D. Okay. So if you look
mm,
at it, this is your A, this is your B, and then you have a sub A, sub B, sub C, sub D. Your sub D is your big C. And from your big C, the market moves to D. Okay. Number 5. Number 5 is when the market will come back multiple times, as in creating multiple sub A, sub B, sub C, sub A, sub Z, sub C, all the way to D until it gets to the main C. Okay?
Yeah.
So this is an example. This is your A, this is your B, and then the market says this is sub A, sub B, sub C, sub A, sub B, uh, sub C, sub D, and then this is another sub A, sub B, sub C, sub D, and then this becomes your capital C or your big C, and then the market rally from here to the end. And then this last one, this is what we call the whippy nasty. Okay, whippy nasty, meaning you see this market, it can do this A, B, and the market can be here another 1 month doing this yo-yo about. Now you that took the trade from here waiting for the market to favor you, you will be surprised that you have hold the trade for 9 days, 10 days. You have given up, I beg. This is not going to work, and close your trade. And the next thing you see is bam, 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 bam. Okay, the market goes to D. That's when people will say, the broker was waiting for them. The broker has been waiting for them to close their trade so that they can move the market. The broker did not move any market. It's just that you did not understand that there is such a thing as the whipping nasty method of the market going from C to D.
Nasty.
Okay. So in the same vein, we also have the market, moving 6 ways to the extension after the retracement. So after the market gets to C, from C now the market wants to go to D. It also goes to D in 6 different ways. Okay. So there's the one that the market will just go to D straight. There's the one that the market will go to C by creating sub A, sub B, sub C, sub D, sub A, sub C, sub D, like that. Okay. And there's the one that the market will just go in waves. So this is similar to the one of the retracement. Okay. And just similar thing, basically. Okay. So the same whipping as the you also have. Now the market has created C, but from the C now, the market is making ABCD, ABCD, ABCD. Okay. So this is the first example where the market created A, B, attempt to move, come back in, and goes to D. This is the second one. Okay. And this is the third one where the market is going to D, but it's creating sub A, sub B, sub C, sub D. Sub A, sub B, sub C, sub D. Okay. And then same thing with this one. And then this is now, so this one also creates sub A, sub B, sub C, sub D. But then this one is more aligned. Okay, so you can easily come and pick a previous support or a previous resistance as new support, previous resistance as new support, previous resistance as new support until the market gets to D. And lastly is the whippy nasty method. Okay, where the market will spend a whole lot of time figuring what direction to go. Okay.
They said it's better to look for a trading, is it symbol or trading method that works for someone, either
Yes.
trend or Fibonacci
Yeah.
or
Okay. So adjusting the ABCDs, we've talked about that one before. So we'll just quickly move to the, sorry. It's the same, it's basically the same thing. Nothing different except that one is uptrend and one is downtrend. Okay,
How do
so
you draw the downtrend? The downtrend, you just take it from down, and the up, you just take it from up.
downtrend is when the market is going down.
Yeah.
Uptrend is when the market is going up. So when you are applying Fibonacci in an uptrend, you draw from down to up.
To,
When you are
mm.
applying Fibonacci in the downtrend, you draw from up to down.
So
So
it's
in your uptrend, your A is at the bottom and your B is top. In your downtrend, your A is at the top while your B is at the bottom.
that's what used to confuse me. So
So you're
uptrend, your A is at
at the
the
bottom
bottom.
and your B is at the top. No, no, it's taller. Just 1 minute. Let me take this call.
Okay, so
That's those people are terrible people. Okay, Hanson, I'm back. Sorry.
Alright.
So just like, have you gotten the clarification that you needed now about the uptrend and the downtrend?
Yeah.
In your when the market is going up, your A is down, your B is up. When the market is going down, your A is up, your B is down.
Yeah.
Okay.
Mm-hmm.
All right. So in a downtrend, similar like uptrend, your A is up, your B is down, your C is up, your D is down. Okay. So this
Mm.
is A, B, C, D. Okay. So
Mm-hmm.
once you start getting lower high in your chart, you know that the market is going to be selling. Once you get higher high, you know the market is buying. Okay. All right. So similar, like we said, these are the extension and the retracement level of the Fibonacci. So these are the retracement level. All the retracement level are in percentage: 38, 50, 62, 79, 86. Cram them, know them, chew them, reproduce them anytime you are asked. Okay. Then all the extension level are 118, 127, 162. Okay. This one that you are seeing now, this level that you are seeing, these are so the history of Fibonacci, the guy that formed MTI, the founder of MTI, is
Mm.
somebody that is very, very instrumental in this Fibonacci thing. Okay. So
Mm-hmm.
this is MTI's approach. In some other climb, instead
Mm.
of seeing 86, you are going to see 88.6. Okay, you are going to
Mm-hmm.
see different figures. These figures now that you are seeing now. So MTI just told you these are the most important figures. There are other levels, a whole lot of other levels. Even me, I've also created my own levels in the past, by virtue of using Fibonacci. Okay, but then these are the main ones that you should be looking at. So if you just have in your mind that I'm going to trade from 86 to 118, meaning that you are going to look for a chart that the market has retraced to 86 level. The reason is that your stop loss will be small. Remember, your stop loss will always be above the A or below the A. And take note, there's this expression, okay, in the forex market that says if the market does not take out your A, if the market, so this is your A, this is your B, and this is your C. If this C does not go above this A, the market has no choice than to go your way. In fact, that is my confidence that I have in trading. That's one of the confidence that I have. I know that this is A. I know that this is B. In between every support and every resistance is your A and B. Because there are a whole lot of them. Okay, if we go back to our chart, there are a whole lot of support, resistance, support, resistance, support, resistance everywhere in the chart. Support, resistance everywhere. Okay. So one way you can cash it fast is when you compress the chart to the barest minimum, compress the chart to the smallest level, so you can see for sure what is happening in the market. So let's take this market that sold like this to this point. Let's take it like this. This is a resistance. Can you see that?
Mm.
This is a resistance. And then the market come do all this rigmarole and came back to this same resistance level. Can you see that? Now, when the market came back to this same resistance level, we say this market now, this candlestick that has touched this resistance level now, we say this point is our A. Okay, this very point is our A. So let's zoom the chart out. Zoom it out. Zoom it out. Can you see this point? We say this point is our A, right? Watch this. Perfect. We say this point is our A. So this is what? This is resistance. See, if you catch this thing that I'm explaining now, forget it. You can make money anyhow from the market. This explanation I'm explaining now, all you need to do to trade the market is to see this condition. Condition number one, market create double top. Okay. Condition number one, market create double top. After the double top, the first candlestick in that double top is your A. So I say, this is my A. So let me put A there. Here's my test, this thing. It's not there, so let me add it. Test, 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 test. I'm coming, just wait. Test the bed. Okay, all right. So I say this place is A. Distance, area, where's the size, read, blah, 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 area 10. So let's say area 24. Okay, so say this is A. I'll change the color. Change the color to white. I say if you understand this explanation I'm making now, you are going to be the best trader in the world. So I say condition number one, market formed a double top. This is a top. Then the market now came back and came back to that same top, right? So we call it double top, right? So our double top is our A. So let's zoom it back to that place. All right. So this is our A. Immediately after this, our A, immediately after this, our A, this is two candles to the left, two candles to the right. Where is the next two candles to the left, two candles to the right? Tell me if I'm correct. Yeah.
Yeah.
After these two candles to the left, where is the next one? Is it here or here? Which
No,
one?
the previous one.
This one?
Yeah.
Why? Why do you take this one?
You mean the top candle or the down candle, the support candle?
No, this up. So this A is a resistance, right?
Mm-hmm.
This A is a resistance.
Mm-hmm.
Agreed?
Yeah,
We
agreed.
agree that this A is a resistance. After
Yes.
this resistance, where is the first support after the resistance?
That's the
Is it
one.
this one?
No,
Is
the
it this
first
one?
one. Yeah, this one. Yeah.
This one. Okay.
Yeah.
So all of you say is this one. All right.
Mm-hmm.
So now I'll now put Fibonacci from this resistance to
Mm-hmm.
this support. So yeah, put Fibonacci there
Okay.
and stop. Okay. So
Yeah.
now after I put the Fibonacci there and stop, look at level. This one, I'm using this one. See my line and see my line. See my line. My line, if it's below this one, then it's this one, but I'm using this. Okay.
Mm-hmm.
Now, after this, the market started going back, right? The market
Yeah.
was to go back and then came down, came out a little bit and went back again into the AB boundary. So this is your A, this is your B. So let me put our B there. B, 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 B. So let's put our B here. So this is our B. The B. So okay. So this is our A, this is our B. Now, our C is going to come from any of this level, 38.2, 50, 61.8, 78.6, and this. Okay? We'll say this is our C, the possible point where we'll get C. All right, so the market got to 38.2 and it gave us what we call the evening star candlestick formation. Buy, indecision, sell. So this is evening star. Aggressive traders would have said, sell the market from here. They are not wrong. They are correct. So they enter the market here, sell. The most important thing is that their stop loss must be above the A. Stop loss. Even though their stop loss is above the A, can you see that they will still make profit? Because the market did not get to A. Okay? So, but somehow, the market came as if you want to go at, but met a lot of buyers that pushed the market back up. Okay? So the market continued, violated this first C, and went to look for another C. Okay? And then it got to 50% level, and then we got another sell candlestick again. Can you see that? Okay, so now, so 50. So because the market come to 50 or come to 38.2, and then the market starts selling, we said we will put our buy here, any of this place here, we'll take our buy, our sell here. We'll put our stop loss above the A, and we'll put our take profit where? 161.8, right here. Did the market get there?
Yes, it did.
Finish. As soon as the market get there, automatically your trade closes.
So because that's the next support, yeah? Is that
Correct.
what is
Now
our
you can see that if you look to the left, can you see that that place is a support,
yeah, it's a support zone.
a good support zone?
Previous you double twice. Actually twice.
Okay. Then now that you have achieved the first game, you have achieved the first answer, your trade has closed. You are looking to take another trade. Okay. So what you are going to do now, see this your Fibonacci. This your A now. You will drag this your A to where your C is. Your A comes to your C. Okay. This place where you have your C is now your A. Then your B is now the place where you have your D. Your B is now your D. This place
Yeah.
is now your B. So now I have A, I have B. Now I'm looking for another C. So my Fibonacci, I'm now going to move it to this point. See that? So this is now my Fibonacci. Now watch. Can you see how Fibonacci came to 38.2 level?
Yeah.
Look at it, came to 38.2 level. It bounced 3 times. It is the first time, bounce. It is the second time, bounce. It is the third time. He has no choice but to fall down. And this time we say because it's coming from 38.2, it will go to 161.8. So this is 161.8.
What's the correlation between 38.2 and 161.8? Why 161.8? Why?
Because we told you from here that if the market comes to the red level, it will go to red. What is red? Red is 38.2, 50, and 61.8. It will go to the corresponding red. Where is the red here? 161.8.
Okay. Okay.
Okay.
But it doesn't show on the charts like this colored Fibonacci. Is it
I
possible?
just told you that this is MTI software. Okay.
Uh,
On your MT4, it's not going to show like that. MT4 is not designed like that. If you want a platform that is designed like that, it's Trading View. If you go to Trading View, it's showing the Trading View will show you the colors. And you can configure, you can set it. So if you let me open Trading View for you. You know, as a trader, you need to be versatile. You need to know a lot of stuff. When I say a lot of stuff, I mean a lot of stuff. Okay, where you can switch up and down anyhow. Okay, so this is your trading view. Now in this your trading view, your Fibonacci, look at your Fibonacci. You have the colors in your in your trading view. See the colors, they are there.
Okay.
So if you feel everything I'm doing on MT4 now, I can also do them on trading view.
Okay.
Now, but me, I'm not too friendly with using trading view. That's why I prefer using MT4 and MT5. Okay, there are people that are specialized, they love trading view, they use trading view. Okay, so let's see. So did our market get there? Look at it. Yes. Our market hits that place. In fact, it hit the 61.8 and then it created a double bottom and the market started buying. Look at it. So this same thing that we did now, this same thing that we did now for this analysis coming down, we can also do it going up. You know, we can also do it by saying that, oh, the market create double bottom, in fact, triple, 1, 2, 3, and then the market give me A. So this is my A. This is my A. This is my A. This is my B. You see that? This is my B. And then when I put my Fibonacci from my A to my B here, you see the very shallow retracement. The market just came to 38.2. Look at it. Just came to 38.2 and boom, blow past 61.8, 161.8. Look at it. So if you just put a buy anywhere here, and then you put your take profit here, and then your stop loss below here, you would have made this money.
He actually got to 200.
Yeah, I got to 200. Okay. So now your next move will now be, this place is now your A. Okay. Here now is now your A. Okay. Here is now your B. Then you now put your Fibonacci again from A to B. And now you see that the market came to what? The market came to 61.8 level. So you are now going to put your take profit at 161.8. And then you allow the market to run, run, run. Did it get there? Right there. Look at it. Can you see that?
Mm.
Look at it. This is your A, this is your B, this is your 61.8 level for you to start to buy. You enter buy here, you enter buy anywhere here, okay? And then you put your take profit below this point. Can you see how the market went and eat your take profit without coming back to your stop loss?
Mm.
If the market does not take out the A, the market has no choice than to go your way. These are the words of the FS chief, the founding founder of MTI. Okay?
Oh.
So it's very important to understand this concept, Hanson. Take your time to study them. See,
I'll have to
it's
come back to
it's
class.
it's good to attend the class. It's good to hear me talk. But the most important thing is for you to practice what you have learned. Practice it. Understand it. Don't be confused. Okay? And then you now start putting it to practice, putting it to practice. Everywhere in the market, there is Fibonacci. Everywhere in the market. There's two things that are common in the market: Fibonacci and harmonics. Everywhere in the market. They are telling you one story or the other at every point in time.
Harmony.
Yes. They are telling you one story or the other. Okay. So you can apply this to any chart. Any chart. So let me see. This is SM Global. So SM Global has a lot of pairs for you to trade from. Look at this. Look at this platform. I have 1,506 instruments to trade from.
Is it for weekends or all this?
This is
Or
all round, all year round. You can trade. Okay.
plus
So if
weekends?
you are not, so you have stocks. Let me see the breakdown. This breakdown of everything that you have here. You have Forex, you have stocks, you have cryptocurrencies, you have turbo stocks, you have thematic indices, and then you have derivatives. Now, under cryptocurrency, you have a lot. All these are cryptocurrencies. Okay.
I can't find BTC USD on my demo account.
Why? Is it should be there. Have you expanded it to say show all? You need to expand it and say show all.
I have.
Because
I've searched everywhere over there.
which broker is that?
It's not. It's just under BTC under the setting under my MT5 setting. I created new accounts and then I
Mm.
created a demo account. So it's under a Meta Quotes Limited. That's
Meta
under
quote.
MT5. Yeah. So
Okay,
I'm
wait,
not
let me check. Let me
expecting.
check Meta quote. Let me check Meta quote if they
I
have it.
can't find BTC on my demo account. I've
Mm.
s- and
Fine.
searched. It's not showing. I use the search button. Nothing doesn't come up. It's
Just hold
only BTC on its own, and the chart is very funny and crazy. It's not like the normal chart.
on. This is Meta quote. This account is a Meta quote account. So let's see what it has. No, just open.
Meanwhile, I started my demo trade. I took only one trade on euros. I'm making about 500 and something pounds there. But it's just one trade though. I took one lot size.
Okay, see this Meta quote now. This Meta quote, you have like 9,800 instruments to trade for. And you say
Mine is not showing USD. There's no BTC
there's no
USD.
this. So when you come here and click this place, there's no
Now I'm
crypto.
using my phone though. But even on my phone, it's supposed to show because my normal account
Okay,
has.
there's no cryptocurrency. So in fact, let me delete this. See what I'll do now. Let me delete this account and create a new one. Because
Okay.
this account has already expired. I've not used it for a long time. So meta code, delete,
Mm.
delete account. Yes. Create a new account. Let's go and say open account. Meta code, next. Okay. Open a demo account, registration money, next. Okay, phone number is verified. Uh, how much is 100,000? 1 to 500. Agree. Mobile phone plus 234. Nigeria. Okay, and then I say next. Okay, I finish. So this is Meta Put account. Incoming mail. Let's see what we have there. So let's see. Okay, so you have about 10,000 plus instrument to trade from. Can you see that? 10,000 plus. So when you come here, you pull this place down. It shows you everything you have. Well, Forex, This one is not even showing well. Okay, I understand. It's showing me
Mm-hmm.
what I see here. So when you open it for the first time, it will show like this, right? And
Mm-hmm.
then what you need to do is to right click and say show all. When you say show all, everything, these are 10,000 plus instruments to trade for.
I'm using my phone.
Yeah, so I would have, I would think that whether phone, whether a computer, since it's metal code, it's supposed to give you the same thing. So if you
Yeah,
do
but
this
mm,
now, you now see, okay, so that means there's no cryptocurrency I can see. If there's
mhm.
cryptocurrency, you would have seen it here.
Exactly.
So you have stocks, a whole lot of stocks,
Stocks,
then
yeah.
indices,
Yeah.
and then metals, then forex. So there's no crypto. There's no crypto in metal code.
Mm-mm.
So it's supposed to be the same thing, whether phone, whether computer.
Yeah.
Okay. So you need to look for a broker that has a BTC, cryptos. Then you, of course, FSTM has crypto. You can use FSTM.
Can I create a demo account in FSCM? Which,
Yes.
oh, okay. I think I'll do that then.
You can just create a demo account in FSTM, and then you have all the crypto there. Or
Mm.
better still, you can also use this SM I'm talking about now, the one I showed you before.
I'm looking at create opening a new account. I don't know the best one to go for. The one that has maybe a good spread or they are this in a very their trading
All those,
style.
so the way what I
Give
tell
me
people
the right.
is
Give me about three or four. Terrible.
there are several brokers. The brokers are a lot. You need to use a broker. You know, if it's a broker that you want to use to trade your life account, then you need to use a broker that is acceptable in the region where you are. It's not all brokers that are accepted. There are brokers that are not accepted in the UK. There are brokers that are not accepted in the US. There are brokers that don't have business with Nigeria. Okay, a whole lot of brokers. Once you're in Nigeria, you cannot open account with them. Okay. We have a lot of them like that. So you need to look for the one that, have business, in the area where you are. So for you that is in UK, I think the Reef is there. You can use the Reef, you can use AvaTrade, you can use FSTM. Okay, I think one of the limitations in the UK is that they try to restrict everybody to use MT5. Okay, I don't think, I don't know if they accept MT4, but I
No, they
know
are
that
set for. You can use empty. You can use the either of them.
any of them. Okay, so anyone, just look for a broker that has crypto since you are interested in trading crypto, and then you open your account and then you can just use it for demo purpose.
I
Okay.
had
So
an FXM account, but I don't know for whatever reason they didn't allow me to trade with that account. I left money in it. The money was just there. When I click on trade, I complained. I called. I don't know what happened until I got angry and I just withdrew my money and left. And the account is still on till now. I don't know if they would have closed it.
did you speak to any of their agents?
Yeah, I did. I kept going back and forth for more than maybe months or almost a year since the FX team. They're the one that even
If,
delayed
S-
me.
if FSCM doesn't work for you where you are, then you choose another broker. It's as simple as that. You don't need to get stuck. Okay, there are several brokers. Yeah, I use a lot of brokers, in my trading business. So it's very simple. If FSCM give you wahala, just move to the next one. Don't need to rack your head. Okay. All right. So let's just quickly do this. So just the same way we talked about the uptrend. Okay, this is the same thing for the downtrend, right? So we said there are 6 ways, okay, that the market move from C to D. Okay, there are 6 ways the market go from B to C, and there are 6 ways the market move from C to D. And then we talked about these 6 ways. Sorry. We talk about these 6 ways, okay? And then we do example for each of them. See, like in this case, now where you have the market come to A, B, C, D. So in this case, the market came to C 38.2, it moves to D 161.8. It comes to C 50, it moves to D 161.8. It comes to C 61.8, it moves to D 161.8. So these 3 levels, okay, they have their corresponding extension level. Okay.
Mm.
So these are live example from the chart. Like if you look at this one, okay, that's the one I talked about before. So look at this one. This is the one that we prefer. As a trader, this is the one that we like most. Okay, where the market come to the 86 level. You see the 86? 86 is very close to 100. So your stop loss will be very small, but your take profit will be big. You see that? So the market come to 86 level, you put your stop loss above the A and then you buy or you sell, the market come to 118 level. Okay, this is a good example. Imagine that you see this market, this is your A, B, look at your C. Your C is very close to your A. So you sell from here and you put your stop loss above your A. So you see that your stop loss will be small, but then look at your take profits. Massive. Came all the way to the green level. Okay. So the same way we talk about retracement, we also talk about extension. Okay. A, B, C, and then the market drop down to D. So the same 6 ways for the retracement and the market retraces. So it's just similar to what we did in the uptrend. Market come shallow retracement and drop down. The market come do shallow retracement as if it wants to go up and then pull back into the AB boundary, locate a new C, and then it drop down to D. And then for each of the retracement level, the market just hit there, get a candlestick formation, and then drop down to D. Why in this case, the market creates sub A, sub B, sub C, sub D, which is giving you more like an harmonic pattern, and then the market drop down to D. Okay, the same for this before the whipping nasty method. Okay, where the market will have to do so many days. So let me give you an example. This is whipping nasty, where the markets do all this crazy retracement and then boom, it goes to D when you are already tired of the trade.
Mm.
Okay. So for the extension, we did a similar thing. So the market is going to D. The market does so by creating waves, which is A, B, C, D, A, B, C, D, A, B, C, D. Okay, so the 6 ways you will see them. Okay, the first one, the market retrace, and then boom, it goes to D. This one, boom, it goes to D. This one, it goes to D, but it creates sub A, sub B, sub C, sub D to give you D. This one too similar. This one is, I prefer this one, okay? Where the market give you C, and then it does A, B, C, D. Each of these A, B, C, D, you can actually profit from them until it gets to D. And of course, the last one, the whipping nasty again, okay? So that's an example
Earlier
of it.
you say XTB,
Come back.
XTB, XTB. Did you
X.
mention XTB, yeah? Trading platform.
No, 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 no. I didn't mention that one.
I thought I heard you say XTB.
Okay, so after that, you find the A and the B to adjust. Okay, just like I said, once the A, B, C, D is formed, you adjust your A to C, your B to D, look for a new C, and then sell to D. Okay. Okay, I think that brings us to the end of today's class.
Mm, so
said if you have any question or clarification you want to make.
When I'm done with rewatching the videos, if I have questions, I'll write them down.
Okay.
I have to go through it again.
We discussed this already before.
Yes, sir.
All right. So go and try your hand on, what we have done and see what you can make out of it. Very important.
All right, sir. I'll open an account. Although I've started the demo trading, I've started trading on the demo account. But maybe just 2 trades. I'll intensify it so that I can see how well I'm getting more confidence with it. Because I think that's the major problem I have right now. And then look for a suitable trading style that best works for me. I like the Fibonacci one because I see it's very accurate, and then the trend line. So I'll probably focus on those two more and explore it.
Yeah, Fibonacci is extremely accurate. Extremely.
Yeah. I think I've always had issues with how to draw it, or where to draw from, drag from down to up or up
Yeah.
from down. But now I understand
Once
it.
you establish the direction of the trend, then the way you draw it is not a problem. The only way you have challenges when you are not able to establish that the trend is going up or is going down. But another way too, you can also know the direction of the trend is your moving average. Put your moving average on the chart.
Yeah, I have moving average on the chart.
Once you have the market going down below the moving average, you know it's selling. And it
Which
is at
one do you use? Is it 50, 20, or 100?
50
Sometimes
ideally. Use 50. 50 is better. 50
yeah.
is like a mid-range. Okay. So 50 usually separate the market to buy and sell. 100 do that. 200 also do that.
Yeah,
But 50 is better to use because it's a mid value.
mm, okay.
All right. Thank you
I'll
for
I'll come with questions in our next class.
no problem. That's fine.
Thank you very much, sir.
Okay, yeah, bye.
Have a good night. Bye.